This video is used to help you work through your Chapter 1 Learning Target 3 examples that we're doing in class. So we're going to take a look at how transactions affect the accounting equation. If you remember, our accounting equation from before is assets equals liabilities plus owner's equity. So before we can kind of dig a little closer there, we need to kind of classify what accounts are assets. Remember, assets are anything that we own, that we use, that we can turn to cash. So some examples of assets are going to be cash. Another example of assets is going to be accounts receivable. This is when someone owes us money. I'll talk a little bit more about that in a second. Another example is supplies. So the iPad that you're using to watch this on, the chairs that you sit in, the tape, the paper towels, the hand sanitizer, those are supplies. Those are all assets of the school district. Another example of an asset is prepaid insurance. Okay, now liabilities now are things that we owe people. So these are assets, like I said, our own. Liabilities are things that we owe people. So that would be an accounts called accounts payable. Okay, and we'll talk a little bit more about that. Next, we get into our owner's equity account, and this is kind of what makes us what we're worth. So in our owner's equity account, there's four major kind of categories. The first one being capital, and that's when an owner invests in the business. Then there's drawing, and that's when the owner takes their money that they've invested or maybe have earned over it, and that's when they withdraw from it. Okay? Other things that make us worth more or less is sales. Sales makes us more, and so does expenses. Now, to kind of clarify and help this whole accounts payable, accounts receivable, there's a real easy way to look at this with it. And in the accounts payable, you're going to see anytime you see something that says blank on account. When it says blank on account, it means one of two things. It's either going to be accounts receivable or it's going to be accounts payable. Okay, so if we sell / sold and receive cash on account, that's going to be called accounts receivable, which is an asset. So then now it makes sense why accounts receivable is an asset, because we are going to ultimately be receiving cash. We just don't have it now. If we buy and pay on account, if the transaction says buy on account or pay on account, that is going to be accounts payable, which is a liability in there. So we'll keep those in mind as we kind of go through here. So now we're going to take a look real quick here. We want to know, how does the following transactions impact the accounting equation? So we received cash from owner as an investment. Well, let's draw our accounting equation. Assets equal liabilities plus owner's equity. I like to circle the key words in there. So I have cash and I received cash. So I know from up above that cash is an asset. So I'm going to label it as an asset. Well, we received cash. What did cash do? Cash went up. So we're going to draw an up arrow. Owner as an investment. Remember, we got that investment over here. That's in my owner's equity account. So I'm going to call that capital. And my investment went up. As you can see, my accounting equation balances. What I did to the left is going up. The right side of the equation is going up. We are good. So let's continue on. Paid cash for supplies. Remember, left side has to always equal it. So assets equal liabilities plus owner's equity. I'm going to circle it, paid cash and supplies. So I have my cash. Well, I paid cash. What happens to my cash account? It is going down. But I bought supplies. Supplies, as listed up here, is an asset. So now, since I'm working on the same side, what happened to my supplies? Well, I bought supplies, so obviously my supplies are going up. I worked on the same side of the equation. Since I worked on the same side of the equation, I have one arrow going up. In this case, it's supplies, and I have one arrow going down. In this case, it's cash. Let's move on to the next one. Paid cash for rent. Again, assets equal liabilities plus owner's equity. My paid cash, and I'll circle rent, but I know cash, and paid cash means my cash went down. My rent, if you go back up here, that's going to be technically an expense. I need rent in order to operate my business. So I'm going to label this as rent expense. And what did it do to the worth of the business? It makes us worth less because we have money going out of the business. Again, left side decrease, right side decrease. Keep everything in balance. Next, we move on to bought supplies on account. So here's that on account, right, that we talked about, and we have supplies. Well, we know that supplies is an asset. How do we know it? Because it's right up here. We looked at it there. So supplies is an asset, plus we own it, we use it, and we can turn it to cash. So let's do the easy one. Bought supplies. So what is our supplies doing? Since we bought supplies, our supplies are going up. Now let's go to our on account. Let's go back up to here. If we buy something on account, what's it going to be? It's going to be accounts payable, which is our liability. So our accounts payable is going to increase. Again, left side increase, right side increase. Continuing on. We have paid cash for telephone bill. Assets equal liabilities plus owner's equity. Don't you just love this? Paid cash, easy one to do. Cash is going to do what? Well, we paid cash. Cash is going down. Telephone bill, that is something that is needed to operate the business. Since it's needed to operate the business, it is an expense called utilities expense. What do expenses do to the worth of the business? Well, it decreases the worth of the business. Again, left side decrease, right side decrease. We balance. Paid cash for supplies bought on account. So we have our paid cash again in my accounting equation. So I know it's cash. What's happening to cash? Cash is going down. Oh, there's my on account. Well, let's go back here. I paid cash on account. Well, that means I'm going to be using my accounts payable, which is my liability. What's happening to my liability? Do I owe them more or less money now? I'm actually going to owe them less money because I am paying them money, so I either owe them less money or no money. Quick question here that a lot of times tricks kids up is why is it not supplies? Well, the reason why it's not supplies is because supplies was recorded up here in this transaction. So we don't need to record it again. We already have received the supplies. Now we're just paying off the promise to pay them. Moving on, we have our next one, which is assets equals liabilities plus owner's equity. We received cash from sales. Okay, so we know what cash is going to do. Cash is ultimately going to increase. If we receive cash, cash will increase. We look at what sales are. If we go up here to sales, we know that sales are an owner's equity account. Okay, and think about what's going to happen to sales. It's going to make our owners worth more, right? So, plus left side is increasing, so what does the right side have to do as well? It has to increase. Sold services on account. Let's take a look at this. Assets equal liabilities plus owner's equity. Sold services on account. So I have sold and I have my on account. So let's go up here and take a look, and what we see, oh, there's our sold. That must mean it's going to be accounts receivable, so we need to use that on there. So my accounts receivable. Okay, and then we have sold, which is past tense for the word sales. And when we talk sales, that's going to be our owner's equity account. So therefore, we're going to put sales here. Okay, so now let's think about this. Does Mr. Harrison have to pay us more or less? He has to pay us more. Does this sale of these services, does that increase or decrease the worth of our business? Well, it's going to increase the worth of our business because it's money coming in. Again, left side equals right side. Paid cash for insurance. Well, take a look here. We have assets equal liabilities plus owner's equity. Paid cash. We know that we're going to use our cash account, and we know that paid is going to be a decrease. But insurance, what is insurance? Insurance is a weird one. It's technically an asset. You might confuse it and think it's an expense, but it's not. It's actually an asset because we haven't used it. If you think about how you purchase insurance, you pay for it and then you use it. So you kind of pay it ahead of time. So we call that a prepaid insurance, and that helps explain it. And therefore, since we're operating on the left-hand side of the equation, since cash is going down, what did we get? Well, we got more insurance because we paid cash for it. Moving on to the next one, assets equals liabilities plus owner's equity. Okay, we received cash on account from Harrison. Well, we got our cash. We have that here. What happened to our cash? It went up. It's our on account again. So let's go up and take a look at our little handy cheat sheet here. Well, if we received cash on account, we know it's going to be accounts receivable. And we know accounts receivable is an asset up here. So therefore, we're going to put our accounts receivable. Now let's think about it. Does Mr. Harrison owe us more or less money because of this transaction? His promise to pay is actually less. And again, that makes sense because our left side, we're working on the left side, we can increase and decrease. So lastly, let's look at this. Owner withdrew money in the form of cash. So let's take a look at this. We have cash in here, so we're going to use our cash account. Well, do we have more or less cash in this example? We actually have less cash because the owner withdrew. Think of like if you went to an ATM and you withdrew money from an ATM. That withdrew means money is going out, cash is going out. Now, if the owner is there, is there a liability? No, the owner is actually withdraw, aka drawing money out of the business. When an owner draws money out of the business, does it make the business worth more or less? Makes it worth less, and it decreases. But again, an easy way to remember it too is my left side is decreasing, my right side is decreasing. Hope this helps.